Hello everyone, good afternoon, and welcome to this weekend's gold market analysis. Trust you all having a good weekend. So, what you see on my screen was my structure for last week, and it actually guided our trading decisions. For those of you who saw my video, we projected a potential descending channel after price broke out of this trend line. Then we had the resistance line somewhere around here. And of course, as you will see, last week price action started around the 3,354 level, somewhere around here. And then we saw price rise and break out of the resistance line of the descending channel we'd been watching, and climbed over 400 pips to finish around the $3,400 zone. But if you noticed, let me zoom in so we can see things clearly here. So if you noticed, it wasn't really a smooth ride to the top. As you can see, the movement was a little bit choppy with stop and go candle and hesitant follow through. That's usually a sign buyers are interested, but they are not ready to go all in. And in my view, that hesitation wasn't just random noise. The market was bullish, right? But with one foot still on the brake. Now, why is that so? You see, traders knew there are a bunch of high impactful events coming up on the US economic calendar for next week. As you can see on my screen, we have on Tuesday the consumer price index, and on Thursday the producer price index, which are of course inflation numbers. Then on Friday we have the retail sales data and the Michigan consumer sentiment index. Plus, they are still trying to figure out if last week's tariff news on Swiss gold bars was a one-off headline spike or the start of something bigger. Of course, no one wanted to overcommit before seeing if inflation might come in hot and spoil the party. And after the jobs data from last week and the previous week, where we saw some disappointing figures, there was no strong push from the Fed to confirm the September rate cut narrative, which left the market guessing whether they will stick to it or pull back. On top of that, if you look at the chart, price action is currently oscillating at an all-time high. As you can see, the last high was a 3,452 level. That alone makes most traders more likely to buy dips than chase highs, which could keep the choppiness alive maybe at the beginning of the incoming week. So if inflation eases and the Fed sounds dovish, gold could run higher. If the data surprises to the upside or tariff gets softened, we could see a pullback. So how am I preparing for next week? In this video, I will walk you through the key price levels and structures I'm watching, how they tie into market sentiment right now, and how I plan to navigate the week ahead. Now that we've set the stage with the bigger picture and what's driving sentiment, let's step onto the chart and see how the structure is shaping up on the 4 hours time frame, because this is where the market's real intentions start to reveal themselves. So the first thing I did on the 4 hours time frame was to take into account the character of price action over the last 2 to 3 weeks, especially after the drop from the $3,440 zone. As we saw here, price dropped into the 3,265 before the market started to shift. And since the beginning of this month, the market had find new highs, and that has given me a couple of ascending trend line to work with. As you can see, connecting the series of higher lows here, we have this primary ascending trend line and I have the second one right here. So this trend line will be my roadmap for the week, helping me gauge whether buyers are still in control or if we are losing momentum. Of course, you know how we use our ascending trend lines in this community. As long as price remains above them, we want to be looking out for patterns and structures that support buying ideas, and will not consider selling unless this ascending trend line is breached and broken to the downside. Then secondly, I've also kept the resistant line from the descending channel we talked about in my previous video intact. As you can see, we saw that line got broken to the upside, and right now it appears um, to be acting like a support line. And the question here is, will it hold and keep buyer pressure alive for another bullish wave? Or will this breakout we saw here turn out to be a false one, sending price crashing back to the downside, maybe for a deeper pullback? And from a fundamental angle, for the pullback scenario to happen, we're likely going to see a stronger than expected US inflation figures, maybe upbeat retail sales data, or hawkish Fed commentary, which could weigh on gold and drag the price of gold to the downside. And for the bullish continuation, softer inflation, cautious Fed signals, or ongoing tariff related safe haven demand could keep the upside intact. Now, to make things easier for me to navigate the structure next week, I have my key level duly situated at the $3,380 level. And as you will see, the last 3 weeks, this level here had played a significant role in determining the direction of price action. So at some point, it was a demand zone, right? Then it became a selling niche during the last week of July. And we saw what happened last week after it served as a resistant line for some time. The second half of last week saw price broke out the structure, came back to retest it on Friday, and price closed above it. So if price holds above this key level, it will keep my bullish outlook intact and look for continuation patterns along that ascending trend line. Maybe price breaking out of that 3,405 will further confirm the uptrend scenario. But if price action breaks down the 3,380, look at that, it also had broken down that primary ascending trend line. I will look out for patterns like signs that buyers are finding it difficult to climb back above the key level to sell. That will shift to looking for structures that support selling ideas, at least down into the next support zone, maybe the 3,330 or the support line of that descending channel we marked out in my previous video. So that is what I'm looking at for next week. It's a simple structure we have here, and of course I will be monitoring how price behaves around this confluence between the 3,380 and the 3,405 during the early hours of next week. And once I see how it reacts, I will drop an update in the comment section so we can all stay aligned. So that's it from me, my personal take on the gold heading into the new week. If this brought you clarity or helped shape your view in any way, kindly support the work by giving the video a thumbs up. Thanks for watching, and see you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone.